Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at the gold market as usual. So technical on the gold market, as you can see, situation maybe is not as really interesting as in the euro currency, where we've got the grabber on the dollar index and in general anticipating some downside performance due to the kind of the bread and butter trade on the weekly chart. On the gold, technical situation stands slightly different, but it is very interesting from the macroeconomic point of view. And today in our weekly report we could try to clarify this subject, because macroeconomy is not really the subject that it needs to be taken a look for too often. But sometimes it's really very important, and we should know where we stand in the big picture. So if yesterday we're considering some microeconomic issues which is going on with the debt, with some problems, we have proved by the United States actually we don't have any growth despite what the gross domestic product shows, and explain why it stands so and what really could be the consequences. And today in the gold market, since the macroeconomy has the direct impact on the gold market as it was in the whole history of the economic world, currently you could really see the analogy with the situation of the 70s, where United States was approximately in the same situation. It was the defeat in the Vietnam War, it was some probes against the president, some difficulties with the inflation, and something of this sort. And actually, just to keep it short, currently we're coming to the point where the next failure of the obligations fulfillment stands on the horizon. If in the 70s it was the breaking of the gold standard, but Nixon said that actually the major background for a reserve currency was the guarantee of the wealth preserving. So people who just invest in United States dollars, they do know that if they will keep money in bonds, United States bonds, they will keep and preserve the purchasing power of the currency. So you could buy the same amount of the same goods within the 5-10 years, and it will not lose this power. Currently, we're coming to the point where this obligation fulfillment could fail, and this will be really very important. So we covered this topic in our weekly report today. So speaking on the technical side, there is no surprises actually here. Market behaves well with the double repo sell on the daily chart. Now it's coming to the first destination point that we intend to keep an eye on. It's 1922, 1933 conference support. And take a look, this will be also weekly, the daily average sold. So our general trading plan is bullish, and we treat this downward action as just, well, technical response after this rally. So some relief of the overbought condition, so technical response on this, and we treat this dip as a potential to buy at a better price. So we're considering taking the long position first of all, and from that standpoint of view, our task is to keep an eye on the major fib levels. The first one will come here, next one will be 1886, and also in between we have the 50% level, so around 1905 area, because double repo by the Judd Napoli framework has the minimum target around 50% support, although he doesn't use the 50% level of among his fib levels, but as the target of the double repo is considered the 50% level of the whole thrust. And theoretical market could move slightly lower, despite that we have the strong level, but still we will keep an eye on this level because it's rather strong, and market really could start forming something right there. So this is our primary object. In general, we could describe our trading plan as watch for major levels and keep an eye on the possible bullish signs and bullish patterns around it. Once we will get it, we could consider taking the long position. That's some simple explanation of our trading plan for now. On the follow time frame chart, I see nothing really special, so market just moving lower. Here we have from Friday some acceleration below the trend line. On the hourly chart, we also see nothing. Market, as you can see, has dropped below the XOP. We haven't got any pullback here by far. It just has started in the evening on the Friday, a minor pullback here. And the only thing that we could imagine, is probably seems at least theoretically possible, is a head and shoulders pattern. So even butterfly we can't get here because we don't have any wings. So here's the direct straightforward downward action. Market right now stands in between of these levels, so somewhere between 1930 and 1938. This market already testing the confluence on the daily chart. We theoretically could suppose that maybe here something could happen. But of course, we do not intend to take any action before we will get it in place. So this is just the potential response. But it's also going to happen that the market will just keep going lower. It's also possible. So, but if it will start to form, we at least do know that here's might be the hand shoulders. Scalp traders could keep an eye on this thrusting action to the downside on the hourly chart. It looks pretty nice. And if you would like to, you could consider some bread and butters or maybe double repo pattern will be formed here for some really scalp trades on the possible upper direction, or it will be downward continuation trade if it will be the bread and butter sell or something of that sort. Why I think that theoretically gold could show more extended downward action, because if we'll take a look at the other markets, in particular speaking, take a look on the 10-year bonds, you could see the markets forming hand and shoulders. And the right arm is also only start to form. It's forming this on Thursday reversal bar. It means that it could climb slightly higher, somewhere to the 4.85 area to keep the harmony with the right arm. This performance definitely will become the headwind for the gold, because rising yields always make pressure on gold and support the dollar. And this pattern stands in agreement with the direction of the crabber that we've got on a dollar index. So you can see this is the weekly crabber, so just taken out of this top. So both together suggest some really problems for the gold market. And it means that despite that we here could suggest maybe some hand shoulders or something of that sort, but this is just a suggestion. So it's probably just by the shape that market is forming right now. But in reality, we could get the situation where market just could drop even more to the 50%, as I said, 90 even area or even 1885. So these two levels seems currently, well, if we will look back at the dollar index and treasury bonds, this level seems more probable destination point for the gold in the nearest term. So that's our view on the gold, and let's see what will happen around the confluence and what the performance we will get through the week. Around this level, maybe we will get some trading stops just for intraday trading, some bounce or something of this kind. So we also will see.